Good evening to all of you. I am Kuldeep Chawla, the Chief Financial Officer of Puravankara Ltd. Thank you so much for joining us on Puravանկara's Q1 FY19 earnings call today. We are at an interesting point in our journey. Puravankara, like most other organized players, has benefited from the consolidation the real estate industry is witnessing following the implementation of RERA. The share of organized players in both sales and new launches has increased by 1.5 to 2 times over the last 2 years from FY16 to FY18 as per data from independent sources. During the quarter, Provident sales more than doubled YOY. Even without new launches in this quarter, our overall sales for both brands clocked a steady 0.61 million square feet, valued at 370 crores, of which Puravankara's share was 313 crores. Sales were led by ongoing projects, especially those of Provident, which demonstrated an all-round growth across its key markets. The group sold over 6 residential units every day, a 23% growth year-on-year, along with double-digit growth in sales realization across both our brands. The premium affordable housing segment is witnessing strong demand growth. Provident contributed more than 57% of the total sold area and more than 70% of the total units sold. Provident sales contributed 47% of the total sales value in Q1 FY19, up from 24% in Q1 FY18. 2 recent launches in Provident over the last 4 months have broadened the base of sales and markets both, with sales of over 860 units out of 1,100 units opened up in Provident Park Square and more than 800 out of 882 units opened in Provident Adora de Goa, the latter in July. Going forward, Puravankara is expected to demonstrate the same strong growth in its targeted launches, which are being rolled out over the next few quarters and where marketing and pre-launch activity on the ground has already commenced. There has also been a change in accounting standards. Accordingly, effective the 1st of April 2018, we have started recognizing revenue on a completed contract method versus the percentage of completion method based on the new accounting standard. Whilst this does not affect the fundamentals of the business, revenue would now be recognized and accounted for only when possession and registration are completed. Therefore, on a consolidated basis, revenue of 3,340 crores, which was recognized until the 31st of March 2018, has now been reversed. Based on the reversal of the corresponding cost of project and taxes, retained earnings for the period up to 31st March 2018 has been reduced by 610 crores through an adjustment to the net worth. This reversed revenue would now be recognized over the next couple of years as the respective projects are completed and our esteemed customers take possession of their units. The numbers for the current quarter, therefore, are those under Ind AS 115. Here are the financial highlights. Consolidated revenues stood at 394.7 crores. Continuing our focus on execution, we spent 275 crores in Q1 FY19 across all our projects, an increase of 55% year-on-year. Earnings before interest, depreciation, taxes and amortization stood at 107.45 crores, representing an EBITDA margin of 27.2% on consolidated revenues. Profit before tax stood at 35.47 crores, 9% margin on consolidated revenues, whilst total comprehensive income post-taxes stood at 26.46 crores, or 6.7% of the consolidated revenues. Collections from operations for the quarter continued their healthy trend and stood at 333 crores. Surplus before interest and taxes was 58 crores after accounting for the operating expenditure of 275 crores. This operating surplus was higher than the combined operating surplus of the previous two sequential quarters. The balance collection from sold units of all our launched projects stands at 1,725 crores as of June 30th, 2018, and is favorably balanced against the balance cost to go of 1,631 crores. Combined with the unsold receivable from launched projects of 3,547 crores, the projected operating surplus is 3,642 crores on the launched portfolio, as against the current outstanding debt as on June 30th of 2,303 crores. The gearing or debt to equity ratio as at the quarter end increased to 1.27 times as a result of the adjustment of 610 crores made to the net worth due to the Ind AS 115 accounting standard. The weighted average cost of debt stood at 10.76% for the quarter June 30th, 2018. In summary, we are confident of the overall market scenario, especially for the gateway cities of South and West India, which continue to be our focus. Our recent successful launch of Provident Adora de Goa in the end of July demonstrates our commitment to our brands and our ability to capture emerging opportunities by spreading our presence across our focus markets on a pan-India basis. With this, I hand you back and would like to open the floor for questions.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask questions may press star and 1 at this time. We have the first question from the line of Ruchi Parekh from Anand Rathi. Please go ahead.
Hello. Hello.
Hi, Ruchi.
Hi, sir. So I just wanted to understand that the launches could not happen in this quarter. So if we see in the last con call, we had said that there would be approx 2 launches which would happen in the 2 Bangalore launches. So what are the, any update on that as approvals were in place?
So far we have done already 2 launches. So we have done already Park Square in Bangalore got launched last quarter.
Okay.
Right, which did really well. Then we had Goa launch 3 weeks ago, which did really well. Out of 880, we had sold 800 plus units there. The next launch we should see next month in Bangalore. So it's just the marketing and pre-launch. So for another 3 launches, we already have all sanctions clearances. It's just marketing, sort of on-ground pre-launch activities, which is, pushed it by a couple of days here and there. But you should see one in the next 2 launches minimum in the next 2 months.
Okay, and are they in Bangalore, sir?
So yes, 2 in Bangalore.
Okay. And so, as we have reversed the revenue of around 33.4 billion, so by what time do you expect these to come back? Like, say, around 2 years, 3 years?
About 2 years.
2 years.
About 2 years.
Okay. And so, just last question, if I may ask. So, the debt-to-equity ratio, which is around 1.27 now, so what is the comfortable level for you? Although, of course, it has been because of the NDS adjustments, but just wanted to know what is the comfort level that you would be happy with?
In the earlier format, we had said anywhere between 0.8, right? 0.7 to 0.8 is comfortable. So if I do a like-to-like comparison, today we are at 0.85. With the ready-to-move in inventory, we should see that number coming down and making it a little bit comfortable.
Okay.
This number is comfortable.
Okay. Thank you, sir. Thank you very much.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. Next question is from Sangeeta P. from Qtr1 Advisors. Please go ahead.
Hello.
Yes, Sangeeta.
Yeah, hi. So I actually had a question. I had 2 or 3 questions. One is that on the pace of sales, on slide 9, you've basically given the sales booking. Now, this is the value of the sales booked during the quarter, right?
Yeah, the value figures of 370 crores is the value of sales booked during the quarter.
Okay, so how does that compare to the previous quarter? And, is it possible for you, because this is an important trend to watch, is it possible for you to sort of give a line graph of the last 6-7 quarters in your next presentation? It just gives a sense as to how
we will surely give you that, but I think what we want to tell you is a very simple point, which is that every time we do a launch, you see a huge spike. Example, last quarter, we reported Park Square that sold about 860 units out of 1,100, which is about probably around 8 lakh square feet.
Right.
Okay, 7.5 to 8 lakh square feet.
Right.
Goa, 800 units is in excess of 6.5 lakh square feet. That happened end of July. So what we're trying to say is every launch we do, depending on the size of the project, you'll see us selling between 60 to 90% of that launched.
Right.
In this quarter, we did no new launch.
Right.
And yet we've had a healthy growth.
Right.
We'll give you that comparison.
We'll give you that comparison of how we've done over the last 6 weeks, 6 quarters.
Right.
5-6 quarters we'll give you.
Okay. And the other question I had is that you had in your earlier calls mentioned that, there was a lot of interest coming into completed projects and those projects which are nearing completion, right? Now, is that the inventory which is getting sold out first? And, is there a trend which is now is there confidence coming in terms of booking for projects under construction also? Is that confidence coming back to the buyers? That was one question. The second question I had is I think you had mentioned in the earlier calls that, there would be a reduction in debt levels as we go along, or not a significant increase, yet we're actually seeing debt levels go up. So any thoughts on that?
So the first question is, if you see our quarterly sales number, almost 40% is the contribution from ready-to-move in inventory. And we don't see that trend changing, right? So that's been a healthy contribution on our quarterly sales, minusing the new launches contribution. So that continues. On the other hand, if you also look at our 2 launches that happened last quarter, again, I'll repeat the numbers there. So which was in Bangalore, Park Square, which we launched about 1,100 units, where we had sold 800 plus, 860 units, right? Which gives you a sense of the confidence of people wanting to buy at launch, under construction.
Right.
We had a similar experience 2 weeks ago in Goa when we launched. When we launched 8 out of 880 units, we sold 800 plus.
Right.
700 plus have already paid us the 10%.
Right.
Right? So these are confirmed. So I see a positive trend on both sides.
Okay. And just coming to your accounting change, is it now mandatory for all real estate companies to report sales on the basis of handed over possession?
Yes, Sangeeta, the AS accounting standard 115 actually applies to industry, the entire industry, not just real estate. Now, the reason why real estate is come into focus is because real estate was one of those rare cases where before the project was finished or the product was delivered, revenue was allowed to be accounted for under the guidance notes issued by the government.
Right. Okay.
So, even infrastructure projects, will now move. So there are some technicalities, but just to explain it to you, if the project was being done at site, at the customer's site, then you're allowed to account for it on a percentage of completion method basis.
Right.
So therefore, contracting companies can still continue that same principle of percentage of completion.
Right.
But for residential and commercial units which are delivered on a sale basis, industry needs to follow this accounting standard 115, which is on possession.
Right. Okay. So till then, whatever the customer
or registration.
Right.
And 100% receipt of money.
So suppose somebody registers after paying you 10%, you still cannot book it as revenue.
No.
Okay.
We don't register. We cannot register on payment. Registration means that title has passed on from us to the buyer.
Right. So I thought that under RERA now, that's understanding from the Bombay market that, once you pay 10%, it is mandatory to register the property.
So what you're registering as the 10% is an agreement for sale, not the final sale deed. In Bombay, there is no sale deed concept, so therefore a little bit of confusion. But for example, in Bangalore, when a customer pays us 10%, we sign an agreement for sale, which also gets registered. Once the apartment is ready and we've received 100%, then we register a document called the sale deed. Sale deed is the point at which the title transfers from the developer to the customer.
Okay, fine. All right. Okay, understood. So till then, everything will be shown either as advances from customers, and on the other side, it will be WIP or something, is it?
Absolutely correct. You got it.
Okay, fine. All right. Okay. And on the debt levels, could you just comment? What is the thinking over there? Are you going to maintain debt levels, or will there be any reduction there? Are you seeing cash flows strong enough in the next couple of years for debt to come down?
So debt will remain at these levels. In fact, over the last quarter, it's been flat. From Q4 last year to Q1 this year has been flat. That's number one. Number two, we are comfortable at this level. Number three, although cash flows continue to be good, we want to focus on, at this point in time, to capture the opportunity in the market to do new launches and to use cash flow for that purpose. And so that we create a platform for taking advantage of the traction that organized players, that Provident, that Puravankara are seeing at this point in time.
Okay. Fine. Then just one request, I think I made it last time also, that on slide 15, when you're showing the cash flows, actually these need to be adjusted for tax as well as interest if the purpose is to compare or, say that the cash flows are good enough to cover the debt in the next year or two. Otherwise, I think they're a little overstated.
Because of the revised accounting in
See, what we could do, I'll tell you what, whilst we can attempt to do that, Sangeeta, I'll tell you here's what we struggle with. Interest is a function of, interest and taxes are, so some of these things are known within a range, but they are not predictable. Interest is the function, for example, of cash flows. If the cash flows come sooner, whether we use the cash flows like we are planning to for growth, or we use it to pay down debt, the interest will vary a little bit, right?
Right.
Instead, what we can tell you is that, even if you make the assumption that it will take us 2 years to sell this inventory, then, interest you can take at example, 250 crores a year.
Right.
The current level. So that's 500 crores. You can take our expenditure, overheads, everything, of about 150 crores to 175 crores a year, and take that into 2 years. So that's another 350 crores, right? And take another 100 crores for taxes. So all told, not more than, 1,000 crores including contingency you can knock off.
Right.
That will still give you, from these levels, 2,500 crores versus our debt of 2,000.
Right. Okay. Right. Okay.
Right?
Yeah.
But we hear you.
Right. Sure. Thanks.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. Next question is from Preet Nagarset from Wealth Finder. Please go ahead.
Yeah, hi. I think my question is more related to the inventory and the competition. I think across industry there seems to be a number of launches happening, not just from Puravankara and Provident, from other competitors as well. I also see about a lot of inventory that's there in the presentation that you've provided. I think it's roughly totaling 3,500 crores that's open for sale. So can you shed some color on how you plan to reduce your inventory with the kind of landscape that's there in terms of the competition?
So one fundamental change you would see is in all the recent launches, we've changed the way we sell. These inventories where you see are projects that were launched more than 4 or 5 years ago, where the strategy was to sell only a 10-15% at launch and then spread the sales over a period of 4.5 years through the course of the construction of the project. So those are the projects. So there, the strategy change has been to have a dedicated focus team. Therefore, you would have seen about a year ago, ready-to-move inventory was hardly contributing 10-15% to quarterly sales, which has now been pushed up with a focus team to about 40% consistently. Right? Point number one.
Okay.
Point number two, the change in strategy we have done is, with this whole pre-launch and the book building process, we are able to sell a much higher percentage of our opened up inventory at higher prices. So again, if you go back to Park Square, out of 1,100 apartments, we have sold 880 in the first 2 quarters of the launch, right?
Okay.
So I have to just sell the balance over the next 3 years of the project construction. Goa, out of the first phase of 880, we have sold 800 plus.
Right.
So we will ensure.
And I'm going to interrupt Ashish, just to put that launch in perspective. As much we sold on regular sales in a full quarter, we've sold as much in one launch in Goa.
Right. Okay.
So the whole strategy of selling has changed completely from what it was, a few years ago. Back to you, Ashish.
So, just sorry to interrupt, but I think what you're saying at a strategy level is to now also to account for more sales for finished inventory, right, where possible, in terms of what you have 4 or 5 years back, because that's what you can show in your revenue numbers.
Going forward, going forward, new launches, our strategy is to sell as much as possible, even 100%, just theoretically, to sell 100% of the entire stock.
Right.
And not at a low price with this whole book building price discovery mechanism, right? Now, for the older projects that were launched where we have inventory that has been unsold, there the focused marketing team that we have put is bearing fruits, where we have seen from a 10% quarterly contribution, it has gone up to 40%.
Gotcha. Okay. And do you think this is sustainable going forward?
The 40% number, yes. Obviously, as that inventory number comes down and you're left with a few difficult apartments, then that percentage will come down, but then even the size of the problem is much smaller.
Right, and then you will have more projects being added to the queue, so, okay.
But the new projects that are being added, I don't foresee having this kind of a problem with the new selling strategy, which we have done it. So, if you go to Silver Sands in Pune, phase 1 was 800 apartments, 800 odd, I'm just giving you a ballpark number. We have sold close to 700. If you go to Kenworth in Hyderabad, where we have opened up, we are 87% sold out. We are still a year and a half, 2 years away from completion. 87% sold out. Goa, same thing. Bangalore, which happened last quarter, same thing. West End, same thing. So all the new launches we've successfully implemented across 5-6 projects, this revised sales strategy, which will ensure there's no build-up of inventory.
Gotcha. So one related question then would be that because you're booking so much early enough, you will be getting that much cash with you. And when you just mentioned that you may be utilizing that cash either for debt repayment or for growth.
No, because the payment, so the booking is done, but your payments will come as per your construction progress, right?
Okay. But whatever...
And RERA, it will be in the RERA account, but you have secured your sale at the right price.
Okay, gotcha. Okay, thank you.
De-risk the project, secured the sale, and you have visibility to cash flow. The important point is that.
Okay. All right. Thank you, guys.
You're welcome.
Thank you. Next question is from Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah, hello team. My first question is what is the launch? Like you said, there are 2 launches in Bangalore, maybe in the next 2-3 months. But what is if let's say for the next 9 months, what is the total launches we are looking in terms of square feet?
If I can take you to page number 10, slide 10.
Yeah.
So that gives you the breakup of the launches.
It's there, but we will not be launching everything at one go, right? We will also be launching.
If you go to the last column, it says expected launch date.
No. What I'm saying is that the full project will be launching at one go only.
Barring a Tirumazisai, pretty much,
No, so I think slide 10 gives you an indication of which are the new launches under each brand of Puravankara and Provident A. It gives you the date, the timing of that launch. To answer your specific question, if I've understood it correctly, anything which is in excess of 1 million square feet, yes, you can assume that we will carve out 1 million square feet and launch that as a phase, and then maybe depending on how the sales velocity is, launch subsequent phases. Okay.
Second is that on the accounting, when we say we have booked about closer to 400 crore, 390, 80 crore kind of a revenue this quarter, but we have not closed any project. So how do we reconcile this situation that there has some registration with a closer, older project? How do we get a hand on this number?
Sorry, could I request you to explain what you mean by closed? Are you talking about registration?
No. So what we are looking is that there is a completion project. So obviously registration will happen.
Are you talking about recognition of revenue, sir?
Yeah. How will you recognize it?
If you're talking about recognition of revenue, then I think I would like to just point you to a simple data point, which is that we reversed 3,340 crores.
No. So if you look at this quarter's revenue, we have recorded revenue of 394 crore, which is coming out of completed handed over position only.
So in this quarter, wherever we have handed over positions, as per the accounting standard, wherever registrations have taken place, is what revenue we are recognizing.
So I understood that the logic is there. So what I'm looking at is that last year, full year, we had about 6 million of completed project, 6 million square feet. So as per the normal thought process is that once the project will be complete, once we get the OC, then only we will go for the registration. Is that the right thought process?
Correct.
So that should normally once suppose if it happens in this quarter, so we will be able to close in the next quarter. That should be 1 quarter window, right?
Or
it might be a bit longer period also.
Inventory which you have seen previous quarter.
Yeah.
We have not reversed any sale or any revenue of the completed project till 31st March where we are given position. We have only reversed revenue of 3,340 crore on ongoing projects and the project where we have not given handover. So coming quarters, the revenue will come out of this revenue which we reverse, and where we are going to give position, those will come, and new position what we are going to give, that those revenue will come going forward.
Okay.
Let me give you an example. In the month of March, somebody made a booking on a completed project, but registered it in the month of April or May, right? So that revenue will get recognized. In the same way, somebody paid last year, example, 80% of a project that was nearing completion. That project got completed in the month of August or September. He registered in October or September. That revenue will get recognized in September, October. So these are the 2 types of revenue recognition that will happen in this current financial year.
Okay. My last thing, when I look at obviously receivables, not net worth has gone down because of this Ind AS adjustment. But is there all the bankers and the credit rating people are okay with that kind of a debt equity going up?
Yes.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. Anyone else who wishes to ask a question, please press star and 1 on your touchtone telephone. Participants, if you wish to ask questions at this time, you may press star and 1. The next question is from the line of Dhruvesh Sangvi from Prospero Tree. Please go ahead.
Yeah. Hi, am I audible?
Yes, yes.
Yeah, just one question. I actually missed the starting part. The sale that has come in this quarter automatically means it has only come out of completed projects. Is that right?
Correct. Okay. Revenue in the P&L account.
Yeah, in the P&L account. And the sale that we are showing as a booking figure, I think 370 crores, it includes both.
Yes, correct.
Okay. I'm sorry if it is there in the presentation, I have not seen, but can you just split this two for me in terms of the completed projects and the under construction projects? The booking figure I'm talking about. Hello?
Yeah, just 1 second. We're just giving you that number, Dhruvesh.
Okay. Hello?
Yeah, completed sales were basically in between Puravankara and Provident were about 180 crores out of 104 crores out of 370. But I just like to make a small point, Dhruvesh. Out of the 104 crores, if somebody bought, not everybody would have registered in the quarter. Example, if somebody bought in June, he may not have registered in June, he may have registered in July. Then the revenue of 395 crores which we recognized won't include all the 104.
I understand.
Right?
Fine. And just one part here. Of course, you have been saying that you see this approximate 1,500 crore worth of ready inventory to get exhausted probably by the next 5 to 6 quarters. Is there a change in that outlook, or this still remains? Probably 5 quarters from now, we would see almost everything gone, including Chennai, or we should not include Chennai in that aspect?
No, it still remains. The same outlook remains.
Okay, fine. And is there further scope of reduction of interest rate in terms of, considering the current environment where we have seen the yields rise a little bit, further scope of decreasing interest cost for us, or we'll see
it's a continuous process. So we're, in fact, there's one team that only works on that aspect. But considering the environment, I don't know if it can go further down. But, the effort is on.
Sure. Thank you. And absolute congratulations for the Goa project.
Thank you. Thank you so much.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management for any closing comments. We seem to have lost the line for the management. Participants, please stay connected while we call them back. Participants, thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Thank you. And thank you, everybody, for joining us this evening. Like I said, we're at an interesting cusp. We will continue to share with you, our joys and our experiences as we continue this exciting journey. Thank you once again, and have an enjoyable evening.